All right, let's just dive right in. The crypto market is getting absolutely hammered right now. Bitcoin has lost its footing, and way more importantly, the mood has just tanked, sending us straight into fear territory. So is this a healthy cleanup, or is this the start of something way, way worse? Let's figure it out. Here it is, our emotional gut check for the market. The crypto fear and greed index has cratered to a 34. I mean, that is a huge dive from the neutral vibe we had just last month. We are officially deep in the fear zone, and this sudden shift is exactly what we need to unpack today. And this right here is the million-dollar question, isn't it? Are we just seeing a necessary purge that's clearing out all the risky bets? Cleaning house? Or are we staring down the barrel of a major collapse? The answer isn't so simple, so we gotta look at the data to see what's really happening. To really get to the bottom of this, we're gonna break it down into 5 key parts. First, we'll explore why the market's even in fear mode to begin with. Then we're gonna dig into this massive $1.2 billion shockwave that's making waves. After that, we'll see how some altcoins are actually managing to swim against this current. From there, I'll give you a solid playbook to help you navigate all this. And finally, we'll pinpoint exactly what you need to be watching next. Okay, first up on our deep dive, let's get a crystal clear picture of what's actually pushing the market down right now. So let's get a quick snapshot of the battlefield. We've got Bitcoin hovering around $68,800, down about 1.8% in the last day. The fear and greed index is obviously flashing red, but what's the real driver here? Well, the fascinating part is that this time, it's not retail investors panicking. All the data points directly to one thing: a massive exit of institutional money. This is a huge, huge deal, and it's the core of the whole bearish argument we're about to get into. So let's talk about the main event, the catalyst that's sending these shockwaves through the entire crypto world. This is the number that has absolutely everyone on edge. A jaw-dropping $1.2 billion in net outflows from the US spot Bitcoin ETFs. Let me be perfectly clear. This is the single biggest reason the price is dropping. When that kind of institutional cash runs for the door, the market feels it, hard and fast. And of course, this kicks off a classic domino effect. That giant ETF sell-off? It triggered over $320 million in liquidations of leveraged long positions. Now, you'll hear analysts call this a leverage flush, and all that really means is the market is slamming the door shut on overly risky, borrowed bets. It's definitely painful for anyone caught in it, but you could argue it's a necessary reset for the market's long-term health. So the big question on everyone's mind is, if this selling keeps up, is Bitcoin going to have to retest that critical psychological support level of $60,000? That right there is a major line in the sand. If we break below that, well, we could be in for a much deeper, more painful correction. It's the level everyone is watching right now. But, and this is a big but, that's only one side of the story. In the middle of all this fear around Bitcoin, there are these pockets of incredible strength. So let's pivot and look at the other side of the coin. Because while some capital is running away, smart money is actively rotating into very specific parts of the market. And this is where the story gets really, really interesting. It's like a tale of 2 continents playing out in real time. While the US is seeing this huge $1.2 billion outflow, over in Europe, they're gearing up for a potential $2 billion inflow, thanks to BlackRock's new Bitcoin ETP in London. And an ETP, an exchange-traded product, is just very similar to an ETF. It's another way for big investors to get in. This global tug-of-war between US selling and European buying is absolutely critical to watch. And if we zoom in even further, you can see that altcoins with their own strong news are pulling in some serious capital. Take XRP, for example. Evernorth just announced a massive $1 billion treasury fund to push corporate adoption. For Ethereum, we're seeing Bitmine Immersion seriously increase its holdings. And maybe the most exciting part, the combo sector of DeFi and AI, or DeFi, has popped up as a top performer. That's a huge sign that investors are betting big on where these 2 technologies meet. I mean, just look at this chart. Wow. While the rest of the market is in the red, the DeFi sector is absolutely on fire, up an incredible 28%. Projects like Chainopera AI are just soaring. This tells you that smart money is moving away from the general market noise and into specific high-growth tech trends they think are going to be the future. Okay, so
We've looked at the storm clouds and the silver linings. So let's switch gears from just analyzing to taking action. What does all this actually mean for you? How can you put together a solid game plan to get through these choppy waters?
So what should you be keeping an eye on? Here are 3 key things to put on your dashboard. First, that fear and greed index. Sitting at 34, it's basically shouting fear. And historically, that has often been a fantastic buying opportunity for patient long-term investors. Second, BTC dominance, which is just Bitcoin's slice of the total crypto market pie. It's high right now, which means inside crypto, people are running to Bitcoin for safety. And third, that ETF net flow. That's the scoreboard for the battle between US sellers and European buyers. You gotta watch it closely. Look, in a market like this, having a tough, solid strategy is everything. Number 1, and this is the most important, minimize your leverage. That $320 million liquidation was a brutal reminder of what can happen. Now is not the time for big risks. Number 2, think about using stablecoins. Moving some of your capital over can protect its value and keep your powder dry for when things settle down. And third, keep your eyes on the long-term prize. Forget the daily drama and remember the real drivers, like new regulations, like the Genius Act, which is trying to create clear rules for stablecoins, and the slow, steady march of big companies getting involved. That's what builds real, lasting value.
All right, we're at our final section. To really understand what's going to happen in the next day or two, we have to look ahead at the specific events that could flip this whole story on its head. Here's what you need to watch for tomorrow, October 22nd. It boils down to 3 things. First, any news about the US government shutdown. If they figure that out, it could bring immediate relief and turn the mood around. Second, the very first inflow numbers from that new BlackRock ETP in London. A strong start would be a huge psychological win for the market. And third, upcoming CPI inflation data. If that number comes in hotter than expected, it could just pour more fuel on the fire. These are the events that will decide where we go next.
And so that leaves us with the ultimate question. Will that critical $60,000 level hold? The answer is going to be decided in the next few days by this battle between US outflows and European inflows, between big picture fears and exciting new tech. What do you think is going to happen? What's your move in all this? Let me know your strategy for this fear market down in the comments below.